855-7967. Paid for by Timeshare Defense.
Seems everything costs more these days. Gas, groceries, and when's the last time you checked your wireless bill? When it comes to big wireless, if you're staying, you may be overpaying. Switch to Consumer Cellular to get the same fast nationwide coverage without the big wireless bill. Plans start at just $20 a month, and now for a limited time, new customers can get their second month free. Call 1-888-FREEDOM, visit a store near you, or consumercellular.com and start saving today. Plans include $5 credit for autopay and e-billing. Taxes, fees, and other third-party charges will apply. See website for additional details.
Broadcasting from the Kanowski-Bresny studios comes the radio medium Laura Lee Show.
I feel like you had to let him go.
Yes, it is. He was on life support.
You've taken on the burden for his passing. Is that true?
That is right.
There's something to do with a Barbie doll.
He used to stick the old school Barbie dolls in the cake.
Oh my God, you're giving me goosebumps right now.
The radio medium Laura Lee Show. Tune into your spirit every Tuesday at 4 p.m.
You're tuned in to Money Matters Boston, 1120 AM WBNW. This is WBNW, 1120 AM, the Money Matters Radio Network. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston, the Money Matters Radio Network.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a new guide available this month. It is titled Trusts in Your Financial Plan. Mike, when you look at the big reasons that someone might want to undertake trust planning and how that dovetails with financial planning, what are the big items that come up for a lot of people?
Yeah, for most common reasons, there's four that I think about. One, in certain states and across the country, there's an estate tax, and so there's trusts that can help you mitigate the cost of that estate tax for future generations. There's trusts that can allow you to do sorts of bloodline planning. Maybe you have minor children and you're worried about passing away young. You can have trusts that are set up to deal with that situation. You have trusts that can avoid probate. And then the fourth one is sometimes a trust that might help deal with creditor protection. Sometimes a nursing home would be one of those creditors.
When we talk about financial planning, generally we're talking about things such as budgeting or investment allocations and things like that, and making that work to get you the money when you want it. How do you view trusts as fitting into that as well?
Well, it's one of those boxes that you need to check, and it goes along with other estate planning documents like a will, like a healthcare proxy. But important for most people, especially those in New England, to at least have the conversation around trusts and whether or not it fits into their strategy.
The guide, again, is titled Trusts in Your Financial Plan, and it is available for you to request at no cost. All you have to do is call 800-393-4001. The title, again, is Trusts in Your Financial Plan, and the way to request the guide is by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts.
We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
The United States Virgin Islands is consistently voted one of the top Caribbean destinations, and recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mark Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mark Fandetti.
Chuck, Mark, and Tucker with you here. It is a Jobs Friday, and our top story of the day is the jobs report for the month of April that came in with 177,000 jobs created for the month, beating expectations of around 130 to 140,000 jobs being created. The unemployment rate was unchanged at 4.2%. And so the big headline numbers that you look at, you say, yeah, like really good as far as what you're seeing there. When you look at the underlying data, I think the vast majority of it is pretty good as well. The couple of weak points that you do see, you did have some downward revisions to the previous 2 months, with February being revised down by 15,000 jobs created and March being revised down by 43,000 jobs created. So 58,000 is the negative revision for the past 2 months. So that's, one of the weak points. Another one that you see, continued growth in the number of people reporting long-duration unemployment, that now up to 1.674 million, an increase of 179,000 over the course of the month, and now up about 400,000 over the course of the last year. But other than that, it's tough to find too much to complain about in this report. Wage growth moderating a little bit, probably something the Fed would like to see, back down to a little bit more sustainable rate. You've got good aggregate payroll growth for the last year still. So, Mark, my interpretation of this is, look, this is a report that came out that basically the data was being collected the week after tariffs were implemented, so it's unlikely to have been impacted by them in any substantial way. But I think it tells us that at least at that point in time, the jobs picture in the U.S., for as slow as the hiring rate has been over the last year or so, it still is a pretty stable and solid job market overall when you look at the data here, with a few things that you might be concerned about, but overall a good report.
Yeah, I think that's a perfect summary. When you're looking at any economic statistic, Chuck, as you know, you try to tease out a change in the trend. Most economic data, GDP, unemployment, inflation, it tends to not turn on a dime absent a national or geopolitical emergency. Now, in this case, we've had an abrupt change with the prior policy in the form of very high tariffs. Will they stay in place? Nobody knows. So we look at data like this and ask, and you've already summarized this, was there a apparent change in the trend indicating that the economy has shifted from solid, strong growth, very low unemployment, and it is still very low, and relatively stable, albeit still elevated, somewhat elevated inflation? Any change apparent in that overall status of the economy before, more or less before so-called tariff liberation day, because these hiring decisions were made before we understood the magnitude and the breadth of tariffs? And the answer is no apparent change, at least not prior to that.
So I think that in looking at this report, like you get into some of the other details here, just to, again, like give you some context as to what we're seeing here. Manufacturing jobs did show a small contraction for the month, $1,000 fewer jobs in the course of the month. Again, basically within sniffing distance of where you were in the previous month, where there was a 3,000 job gain in that area. When you look at motor vehicles and parts, this potentially, showing a little bit of a short-term impact from the auto tariffs that were imposed, down 4,700 for the number of jobs in that area. Mm-hmm. And then you start saying, okay, where were most of the jobs being created? 58,000 of them coming in healthcare and social assistance, 24,000 in leisure and hospitality, 29,000 in transportation and warehousing. So some of this, that transportation and warehousing, certainly feels like companies trying to front-run tariffs. And so I think that can probably account for some of the uptick in hiring there. This is a time of year where you typically do see strong leisure and hospitality hiring heading into the summer. So I think it'll be interesting to see if that continues or if we start to see a little bit of weakness there, given that the airlines and hotel chains have all been warning about, some slowdown that they're seeing on that side of things. But again, overall, I think that the picture here is one where, yes, it's a slow job market with not a ton of turnover, but it still is one where overall, if you have a job, there has been no change through April as to, the pace of layoffs or anything like that. And likewise, if you're trying to find one, it's a little hard, but, you're still seeing net job growth and at a rate that is fast enough to keep up with population growth as well. So I think overall, if I'm grading this out, it's probably like B plus A minus. It's tough to find too much fault in this report, quite honestly.
No, it's what we thought. The economy was in good shape. It's been in good shape for a couple of years since inflation eased. These reports aren't designed, and this is true of inflation data, true of GDP and other reports you get from the federal government. They're not designed to allow you to make snap assessments of where the economy is. That would be like trying to, I don't know, deciding whether or not to cut your grass by looking at Google Earth satellite. Like, it's stale.
You guys don't do that?
This is why your yard's a mess, Chuck.
It is.
I keep telling you.
True.
I keep telling you. So they're just not made for what we try to twist and contort them to fit into. They don't give us the snapshot. I mean, to say their rearview mirror is overstating their value. This is quite stale data at this point, though. I guess it's good to know nothing dropped off of a cliff in the weeks leading up to when these hiring decisions were made, which were probably before April, early April.
Yeah, I mean that's the thing is if you are hiring someone in early April, which is the period that this late March, early April, because effectively this survey was conducted during the second week in April. So these are people that were hired, between mid-March and early April. The decisions to hire those people were probably made in December, January, February. Mm-hmm. And so I think the question is going to be, hey, what do we see in this data over the coming months? And is there a new trend that evolves because of the imposition of tariffs? And we're going to have to see exactly what we get. I don't – look, we may think that there is going to be a slowdown because of the imposition of tariffs. We're hearing it, anecdotally from different companies and things like that. But the fact is, there is no one alive who has ever lived through something like this, because the last time you saw tariff raises, in this magnitude was 100 years ago. And so you basically are, I'm trying to just say, hey, be open to where things could go, and we'll have to see how the data evolves, because I don't think any of us have a clear view on exactly what we're going to get, because we've never experienced this.
Yeah, I'm a little suspicious of people calling for recession with high conviction. Now, I think it's safe to say if widespread tariffs remain in effect, prices are going to go up. Do they continue to go up at an increased rate in the quarters that follow? Some of that depends on how the Fed acts. Some of that depends on how inflation expectations evolve. There's some evidence that expectations have spiked. Other surveys say it hasn't. We're going to have to see how it plays out. But I would beware of any high conviction, very confident assertions that the economy's heading off of a cliff or that we're heading toward hyperinflation. Nobody's using that phrase. As you say, Chuck, it's probably not good, high tariffs imposed indefinitely, but we simply don't know.
Let's take a quick break here. When we come back, we'll talk about the Fed. They have a meeting next week. It's kind of snuck up on everyone, I think, with all of the focus on trade. But we'll talk about this jobs report and how it may influence what the Fed may do at next week's meeting and into the summer, right after this.
The global trade war has roiled markets, and a recession could be next. Keep it here for breaking business news and complete market updates on the Financial Exchange Radio Network. The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com. Creating the right estate plan to help secure your future takes effort. Cushing & Dolan are experts in estate planning. Their new guide is called Detour Ahead, Estate Planning Blunders to Avoid. In it, you'll learn how to make the right decisions to always protect your assets while avoiding costly mistakes, any one of which could have a dramatic and damaging effect on your financial strategy. As an example, if you've created a trust more than 10 years ago and haven't updated it since, you're setting yourself up for problems. Don't take chances with the assets you've worked so hard to attain. Cushing & Dolan's new guide will help you address issues like this, so call right now, 866-848-5699, and ask for your copy of our new free guide called Detour Ahead, Estate Planning Blunders to Avoid. That's 866-848-5699, or request it online from their website, LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Estate and financial planning go hand in hand, and one of the most common ways to keep that bond secure is with a trust. Our new guide, called Trusts in Your Financial Plan, is available right now. In it, we'll discuss the various types of trusts that exist and how they might benefit your planning process. Trusts provide a number of different protections for your assets, including privacy, control, and tax efficiency. If you're retired or nearing retirement and have concerns about your financial strategy and whether or not a trust may help, call us today at 800-393-4001 and ask for your free guide called Trusts in Your Financial Plan. Learn about how a trust could make a difference for you and your family by calling 800-393-4001. That number again is 800-393-4001, or you can request the guide from ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by Margaritaville Resort Cape Cod in Hyannis. Looking for a great vacation spot? Look no further than Margaritaville Resort Cape Cod. Located just off Route 6, Margaritaville Resort Cape Cod is perfect for a weekend getaway or fun-filled family vacation. You'll enjoy first-class accommodations and dining, our incredible Fins Up water park, and of course the gorgeous pageantry of the Cape. Visit Margaritaville Resort CapeCod.com for reservations and more information.
Mark, let's talk a little bit about this Fed meeting that we have next week because, as I mentioned in the last segment, it really has snuck up on us with all of the coverage of everything trade-related. But next Wednesday, May 7th, we do have a Fed meeting. The CME Fed Funds futures market is pricing in a 96.6% chance that there is no change in Fed policy, and I think based on the economic data that we've gotten to this point, that makes sense. I think the interesting thing is looking out over the rest of the year, where the first cut is now being priced in the late July meeting on July 30th, with 4 cuts by the end of the year, then effectively a 25 basis point cut at each meeting in the second half of the year. When you look at how the Fed typically behaves if there were a recession or slowdown, it's not usually, hey, let's cut by 0.25% every meeting that you see. It's usually a much more rapid pace. Yep. And so I think this suggests that traders are kind of trying to weigh out the probabilities here and say, okay, maybe there's a chance that something happens in the second half of the year. But I don't think this is a path that anyone should expect the Fed to take in the second half, simply because it would either be hold steady or cut much more quickly.
I agree completely. The whole convention of cutting by a quarter, and then seeing what happens, that's a Greenspan innovation, and it's outdated. It's probably not the right framework for the current economy. Greenspan in the 90s was testing how low we could cut Fed funds, how low unemployment could go, and it went pretty low beyond anybody's expectations in that decade, without stoking inflation. So this whole idea that we should cut a little, and then step back, almost like you're trimming the hedges, and did I take too much off? I'm just going to do a little bit at a time. I'm going to step back 10 feet. This incrementalism probably doesn't work in the more adverse scenarios being gamed out by people as to the effects of tariffs, Chuck.
So I think ultimately it's something where next week's Fed meeting probably going to be pretty uneventful. Do you think Powell's got anything interesting up his sleeve at the press conference? Anything that you think he might want to mention?
Well, I think deep down, he wants to do a lot. He wants to do and say a lot of things. He wants to assert his independence as a point of pride and to protect his institution, as any Fed chair would want to. Of course, he'll be restrained. Look, the Fed tries to balance inflation and unemployment, and the evidence right now suggests that unemployment is stable, and so is inflation. You wouldn't mess with your primary tool, which for the Fed right now, well, it's always the money supply, but indirectly it's the short-term policy tool, the Fed funds rate. Why would you mess with that if your dual mandate was more or less being satisfied, if things were more or less in balance? I think that's what the models the Fed uses are telling them right now.
You mentioned the models that the Fed uses. Am I wrong in also saying that the Fed spends a lot of time speaking with businesses in their various districts, and they get a whole bunch of information from them as well?
Yeah, I think it's a combination of. I've never having worked there, I know only what you know and what we read in the newspapers and from former insiders. Yeah, I think it's both, but I think at the end of the day, if anecdote, look, Greenspan, I'll invoke him again, famously used anecdotes in the late 90s that told him there's something really interesting going on with productivity. That will allow the economy to run at levels that previously would have been considered too hot. So Greenspan was a master at balancing anecdote and the output of models, hard data, if you like. I think you need really good judgment, Chuck, to pull that off. And I don't know that Powell's got that. We've been critical. I have personally. A lot of people have been critical of Powell, so there's no need to pile on. But I don't know if he's got Greenspan-like, almost mysteriously good levels of judgment. I assume that he and the rest of there's a lot of academics on the FOMC too, and among the Fed presidents, governors, and other FOMC members, who will probably be inclined to trust model output more than their instincts. But I honestly don't know.
What do you make of this piece from former New York Fed President Bill Dudley in Bloomberg? He's got a piece that's titled 6 Ways the Federal Reserve Can Do a Better Job. The 6 ways, I'll just rattle them off quickly. Return to a symmetric 2% inflation target. Aim for a level of employment consistent with the 2% inflation target. What's the priority, inflation or employment, when the two goals are in conflict? Develop a framework for quantitative easing and tightening. Publish both baseline and alternative staff forecasts at the conclusion of each meeting. And develop a framework for forward guidance. Any of those that you want to focus on?
I will point out that most of his objectives can be found in any monetary policy textbook. They're all best practices. There's disagreement among researchers as to what the right inflation target is, but generally speaking, some sort of nominal target, target measured in money, it could be nominal GDP, it could be inflation, it could be commodity prices. Tying the Fed's hands to an extent, which is what an inflation target does, is viewed as a best practice. You don't want somebody just winging it, unless they have a magical touch like Paul Volcker or Alan Greenspan. We've been very, very lucky over the past 40 years. But the rest, Chuck, I got to say, are pretty routine, and I wasn't surprised by anything, maybe except for the way he phrased point number 2, aim for a level of employment consistent with the 2% target. That, he didn't write this, but that actually has it backwards. The economy has a natural rate of unemployment. Most researchers, most economists believe this. Any inflation rate is consistent with that natural rate as long as you keep it stable. Now, higher rates of inflation tend to be more volatile, so there's a point where that breaks down. I was just a little surprised by the way that one was worded, but otherwise all pretty conventional stuff here, I thought.
The fifth one, I just want to touch on this a little bit. Publish both baseline and alternative staff forecasts at the conclusion of each meeting. And basically it's saying, look, if there were different scenarios that developed, how would the Fed react? Do we really need that spelled out for us?
I don't like the idea. Yeah, maybe I should have picked on that too. But we seem to be in a world now where they think more transparency, even if that transparency reveals heavily
something
conflicting
wrong.
Ideas. Yeah, or something wrong. We're in this let's overshare kind of mode, maybe not just here, but in other aspects of life too, like bring your whole self to work. No, thanks. Just bring the productive part of yourself to work. But I digress. I'm not sure. What does Larry Summers call it? He calls it Fed cacophony. All these voices, some of them dissonant. It gets confusing, at least to me. And if it's confusing to Larry Summers, it should be to me and just about everybody else. I think we could use a little bit less cacophony.
I tend to agree. I don't think we need 10 Fed speakers scheduled every week when they're allowed to speak. Fortunately, we've been in a blackout period right now, but. Hey, look, I'm looking on the calendar. Here's what we have after. So Jay Powell speaks 2:30 p.m. next Wednesday. And then Friday, you got Williams, Goolsby, Williams, Hammock, and Musalam all speaking. 5 speakers 2 days after the Fed meeting. Why do we need that? What are we doing here?
Yeah, right. I understand what they're trying to do. They're trying to improve. They're trying to keep inflation expectations stable. But when they all have slightly different opinions, arguably it's not an effective way of doing that.
Right, because you go through this whole thing where it's like, okay, you have to learn like the range at which someone normally talks about the economy, and then they're kind of where they fit into the spectrum of dovish versus hawkish on the Fed. And it's like it's too much, quite honestly. Let's take a quick break here. When we come back, we have Wall Street Watch, and then we'll talk a little bit about what China said yesterday about trade talks.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
There are critical mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699 or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Estate and financial planning go hand in hand, and one of the most common ways to keep that bond secure is with a trust. Our new guide, called Trusts in Your Financial Plan, is available right now. In it, we'll discuss the various types of trusts that exist and how they might benefit your planning process. Trusts provide a number of different protections for your assets, including privacy, control, and tax efficiency. If you're retired or nearing retirement and have concerns about your financial strategy and whether or not a trust may help, call us today at 800-393-4001 and ask for your free guide called Trusts and Your Financial Plan. Learn about how a trust could make a difference for you and your family by calling 800-393-4001. That number again is 800-393-4001, or you can request the guide from ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today, we're talking about the top estate planning mistakes to avoid. Todd, a lot of people create their estate plan, but there are some that don't actually transfer assets into it. Can you explain why this is such a big mistake?
Sure. I'm going to try to explain it both from a revocable and an irrevocable planning standpoint. With the revocable, if you don't put assets in there, you end up leaving them owned perhaps jointly if you're married, and designated beneficiaries and the like. But if everything goes to the spouse when one dies, then you've completely avoided your estate plan. In other words, you've set your trust up, but you went around it by leaving everything to the spouse instead of going through it by funding the trust and cramming down the assets to shelter some from estate taxes on the first death, so there's less taxed on the second death. And ultimately, on the second death, if you don't plan, there could be a probate problem because everything would go to probate if it's in their own name. The other big reason is with an irrevocable trust, of course, not funding it also can result in estate tax problems by the same way it did with the revocable trust. But in addition to not funding them with the irrevocable, you don't even begin the 5-year waiting period to get the assets protected from the nursing home. So there's a much bigger problem not funding an irrevocable trust versus not funding a revocable trust. So make sure you fund your trust if you do your planning.
Well, luckily, Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details the estate planning blunders to avoid. You can request this brand new guide by simply calling 866-848-5699, 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are in rally mode as Wall Street sifts through the April jobs report posted this morning, where 177,000 jobs were added last month, stronger than expectations of 138,000. Traders are also digesting more tech earnings from Apple and Amazon. Right now, the Dow is up over 1%, or 441 points. S&P 500 is up 1.25%, or 69 points. NASDAQ also up 222 points, also 1.25% higher. Russell 2000 up over 1.5% higher. 10-year Treasury yield up 6 basis points and is now at 4.29%. And crude oil off 1.25%, trading at $58.50 a barrel. Apple down by 3% after the tech giant saw its sales climb in the first quarter, driven by higher iPhone demand and the release of the low-end 16e model. However, Apple said it expects tariffs to add $900 million to costs in the current quarter. CEO Tim Cook told investors that it will be very difficult to forecast the effect of tariffs on the company. Meanwhile, Amazon reported solid first quarter earnings. However, the e-commerce and tech giant offered a quarterly outlook that was seen as cautious by some analysts, dimmed by looming levies. Amazon is off by 0.25%. Elsewhere, Cash App parent company Block posted a drop in quarterly results and cut its annual guidance. Block flagged a potential shift in consumer behavior, saying users had cut back on non-essentials like travel and media. Block shares plummeting by 21%. ExxonMobil and Chevron posted lower first quarter earnings, hurt by narrow refining margins, weaker oil prices, and rising costs. Chevron up by 0.5%, while ExxonMobil shares are flat. Airbnb said it expects bookings growth to moderate as economic uncertainty weighs on its U.S. business, sending shares in the short-term rentals platform down by 0.25%. And shares in Take-Two Interactive sinking by 8%. After the video game maker announced yet another delay to Grand Theft Auto 6, pushing the release date from the end of this year to May 26, 2026, next year. Grand Theft Auto 6 is one of the most anticipated video game releases in history and has now been delayed multiple times. I'm Tucker Silva, and that's Wall Street Watch.
Mark, let's talk a little bit about what we saw. I think it was around maybe 7 or 7:30 last night when the Chinese Commerce Ministry put out a statement. I'll quote from it here just because it's in this Bloomberg piece as well. The U.S. has recently sent messages to China through relevant parties hoping to start talks with China. China is currently evaluating this. So I think we're getting to the point in the game of chicken where at least both sides are starting to, publicly say, yeah, like this is not really fun for us anymore, and we need to, figure out how to get to a more sustainable place. They're both trying to do it for their own domestic audiences in ways that save face, for, again, obvious reasons. There are political considerations both for President Trump and President Xi to, maintain appearances that what they are doing is working, and so clearly you're not going to have, either side, have the appearance of caving in any specific way. But the Chinese statement then kind of answered this morning by Steve Miron, who is the chair of the Council of Economic Advisors for President Trump. I'll quote him as well. It's in the interest of both economies to lower the temperature, to create breathing space, to continue talking, to figure out how we can get to a new stable equilibrium on trade. So I would be surprised if tariff rates are where they are now, within a few weeks. And this kind of dovetails with some messaging that we've heard over the last couple weeks as well. Scott Bessent saying last week something similar at that JP Morgan conference. And so I think both sides clearly realize, hey, this is not where we want to be for the long term. But the question is, how can you get, where do you get to, the point that you want to get to and still have both sides able to A, save face, but B, I think for the United States and for President Trump, hey, clearly there is an impetus to put some pressure on China and to get a change in that trade relationship. How do you do that while still keeping the Chinese side happy with whatever the interim step is? Because clearly you're not going to get like a full-fledged trade deal in the next few weeks. How do you get there, I think, is going to be the big question.
Trade wars don't make anybody better off. Trade wars don't ultimately result in long-term solutions to the trade deficit. And I don't even like putting it that way because I don't think, no researcher thinks the trade deficit per se is a problem. It's a symptom of other problems. Slightly different topic, but worth reminding ourselves that fixing the bilateral deficit with China, even if it could be done, and it can't, based on what they're relatively good at producing at and what they're relatively good at producing and what we're relatively good at producing, you can't fix it unless you want to dramatically reorganize both economies, and that ain't going to happen probably, or at least not for a very long time. If we decided to stop trading with China, for example, we'd be worse off. They'd be worse off, as is evidenced by the initial reactions in the past few weeks. And our trade deficit would just go elsewhere. It's a symptom not of being cheated by foreigners, but it's a symptom of us not saving enough. The flip side to the trade deficit is the capital account. You don't hear about this, but they should report it. The capital account surplus. Those dollars get recycled into treasuries and factories and other investments here. If we saved more, we could satisfy that investment demand using domestic savings. We don't, so we have to import it. So these relationships are a little bit complicated, certainly interconnected. They may, in the interest of face saving, as you say, Chuck, come up with something in the short term that we can both live with. But I would not expect, absent a fundamental change in that is, us as citizens and federal government savings habits, us to have any lower a trade deficit in 3 or 5 or 10 years than we do today.
When, the other piece is, and again, just looking at this from the perspective of, potential impacts to the U.S. economy, I think part of this is also then, okay, so what does this interim step down look like? Is it, are we going back to where we were before April 2nd, where there was a 20% tariff on Chinese imports? That would seem to be kind of a big stretch. Is it more what the Wall Street Journal floated last week as a possibility, which is, there were a couple different possibilities they floated, one of which was, a reduced tariff rate down into like that 50 to 65% range, which would still be a really substantial one that still allows for, more goods to be able to potentially be traded, but, not at the same level of profitability they previously were being traded at. Or is it something, the other thing that they had floated was kind of a multi-tiered approach, which is, hey, goods that have national security uses, those are going to be still at the 145%, whereas things like socks and Tickle Me Elmos might be back down to 20% or something like that, and maybe you have a middle tier as well. So I think all of this, affects, what we end up seeing from both the U.S. economy and the Chinese one after this, just because of, the relative size and scale of imports in those different categories or at different rates. There still is not a ton of clarity as to what this is going to look like, even if there is a step down. And so because of that, unless you have, the specifics, if you're someone who knows them all right now, okay, great, you can plan on it. But if you are a company that's trying to figure out, your import plans through the summer, you still don't have a ton of clarity as to exactly what you should be doing right now.
Sure. We need to get back to normal here. I'm editorializing a little bit, obviously, but there's a national emergency still in place. I mean, it doesn't feel like it. It seems like everything's okay, but we're still operating under a law that requires invocation of a national emergency. So maybe this is a bigger ask on my part, and no one who can do anything about it is listening, I don't think. But we need to step back from that and then negotiate trade deficits like trade agreements, like normal countries do. Will that soothe whatever jitters remain in markets? I don't know, but it would certainly add some coherence to this whole process, which still seems to me being driven by kind of day-to-day whims and other considerations that we're simply not aware of or that seem to be changing.
Let's take a quick break here. When we come back, we'll talk a little bit about Apple and Amazon earnings that we saw yesterday right after this.
Market volatility is at its highest point since the pandemic. Keep it here for the most comprehensive coverage of the global trade war. This is the Financial Exchange Radio Network.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Estate and financial planning go hand in hand, and one of the most common ways to keep that bond secure is with a trust. Our new guide, called Trusts in Your Financial Plan, is available right now. In it, we'll discuss the various types of trusts that exist and how they might benefit your planning process. Trusts provide a number of different protections for your assets, including privacy, control, and tax efficiency. If you're retired or nearing retirement and have concerns about your financial strategy and whether or not a trust may help, call us today at 800-393-4001 and ask for your free guide called Trusts and Your Financial Plan. Learn about how a trust could make a difference for you and your family by calling 800-393-4001. That number again is 800-393-4001, or you can request the guide from ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, two of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com. There are critical mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699, or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans in their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Get up-to-the-minute market updates with Wall Street Watch, weekdays at 10:30, only here on the Financial Exchange Radio Network.
All right, couple big tech earnings that came out after the bell yesterday. Let's start with Apple, who's down about 4%. Couple things that we saw from Apple earnings. Sales growth was fine overall, but services came in a little bit lighter than anticipated, and also margins did get hit. I think you can draw a pretty straight line, as far as the tariffs impacting margins during the quarter, since they were hit. I think they dropped from like 47% to 41%, so that's a pretty big shift in one quarter. But one of the things that did come out, and I'll quote it from the Wall Street Journal, Apple said that a majority of devices shipped into the U.S. in the June quarter will originate in India and Vietnam. And so pretty much saying, look, we're going to be changing. It's not that they're able to ramp up production in India that quickly, but much more what I think it is, Mark, is, hey, the devices that are going to be produced in India and Vietnam, prioritize sending those to the United States. The stuff that's still made in China, which is the vast majority of what Apple produces, send that elsewhere and try to ramp up production in India and Vietnam as quickly as possible so that you don't have a huge issue going forward with any extra overhang for stuff that you need to ship to the U.S. from China.
Unless the focus of the trade warriors shifts to India, it doesn't seem conceivable. We need to keep them in the fold in the event of a conflict with China. But how do you plan in an environment like this? You put one fire out. This is kind of related to the trade deficit not going away just because you fix a bilateral or a one-on-one or a country-on-country deficit, and fix is not quite the right word, but I'll stick with it. It's going to pop up someplace else because the trade deficit is a symptom of a savings deficit. Not entirely obvious, but take my word for it. So how does Apple know that we're not going to start picking on India? Well, we already have. They're subject to tariffs as well. It just must be immensely frustrating to try to plan in an environment like this.
I think it's something where, and again, it gets at, what's the key goal of the tariffs? Is it, specifically to minimize the trade deficit with any particular country? Or, again, I've thought since we saw the first implementation back in February, remember you had, Canada and Mexico and China all lumped in February, and, after a day or so, it was okay, we're not going to do the tariffs on Canada and Mexico. We're going to do, a 1 month reprieve, but China, we're going to keep them on. And that to me was kind of the signal all along that I just have felt like China is the target. Maybe some of it is from a trade perspective, but I think quite a bit more can just be, I think that the Trump administration rightly views the Chinese government as an adversary that potentially, has military designs on, being able to expand its footprint of control. And so I think that that's something that is in the back of my mind as I'm trying to sort through, how they're approaching this. I think that might be, a major unsaid goal here is, hey, we don't want to be effectively financing the military development of an adversary through capital flowing over there in order to buy Chinese goods and stuff like that.
I wonder how you advance that if the objective is containment effectively and
I suspect it is.
Hamstringing them economically to a degree, or at least preventing them from getting their hands on technologies that could be ultimately used against us. How do you achieve that other than no trade at all?
Don't know.
Because, we know what's coming here, didn't we? We had an agreement with China in, 2018 or 2019?
Yes.
This is not our first dance with China on this. They promised to buy more of our agricultural exports and so on.
Yep.
I don't know, did we ever get a report card on that? I guess because we're here again, that didn't work. How will this be different? These are rhetorical questions. Will there be any real enforcement mechanisms? How will we measure its success? Are these guys just going to kind of declare victory in the hopes of moving on and everybody forgetting about the confusion of the past several weeks? I know I've asked a lot of questions, Chuck, with no real answers.
The United States Virgin Islands is consistently voted one of the top Caribbean destinations, and recently 2 of their beaches, Trunk Bay in St. John and Mayguns Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI is everything you need to make memories that will last a lifetime. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com.
Mark, we also saw Amazon report earnings after the bell as well. They had, again, another good quarter. Revenue up 9% year over year. Profit came in above expectations as well. But the second quarter had, quite honestly, kind of a really wide range in their profit guidance. So it's kind of like, hey, we're not entirely sure where we're going to be. They said that their operating income would be between $13 and $17 billion. And so, again, that's like a 25% range that you're giving us here on sales between 159 to 164 billion, which was pretty much in line with expectations on the sales side of things. And so I think it's something where, look, Amazon is clearly still seeing good volume coming through there. They're still seeing good growth. The core business looks absolutely fine right now, but I think that they're basically admitting through this, hey, we're not sure how much we're going to see in the way of additional costs. And so because of that, we have to give this wide range of guidance on the profit side just because we don't know what it's going to look like exactly.
So for decades, the U.S. and China have had this, I'm going to call it symbiotic or mutually beneficial relationship. We send them assets and they send us cheap stuff. We consume more than we produce as a result, and they get a better return on their assets than they could get at home. That's been the essence of the U.S.-China relationship since the 1990s. And Amazon built its whole business. Correct me if I'm exaggerating here, Chuck. You know a lot more about Amazon's business than I do. But they kind of built their whole business around this, as did a lot of companies, but especially them, around this arrangement. So if anybody's going to read, now they offer lots more services than they did 15 years ago. But if anybody's going to rejigger quickly in the event of a new normal, it's companies like Amazon.
And look, Amazon has more data than anyone else in the world about exactly how all of their supply chains are working. So, yeah, I suspect that this is going to be something where they're able to try to figure things out better than, more efficiently than a small business that doesn't have that level of insight. But it's still interesting to me that even they're saying, look, we're not entirely sure what the next quarter is going to bring for us from a profit perspective. And, that to me was, again, it basically all showed up on the cost side of the ledger because their revenue guidance was pretty much in line with what the market was expecting. It was the other piece, and this is the one that I keep coming back to, which is, look, even take away all of the macro stuff, whether or not there's a recession, take all that away. This is going to be a margin story for companies. How much margins get eaten into is big as far as where profits potentially go. And then, the follow-on to that is where stocks go. Let's take a quick break. We got hour 2 coming up in just a little bit.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818. Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is the Money Matters Radio Network. WBNW 1120 AM and W275 CM FM. Concord, Boston. The Money Matters Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, two of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Margaritaville Resort Cape Cod is perfect for your next New England vacation. Located just off Route 6 in Hyannis, the resort has everything you need to enjoy an incredible week with your family or a quick weekend getaway. Along with first-class accommodations and food, Fins Up Water Park is packed with aquatic adventures that will keep the kids entertained for hours. The summer season is coming soon, so make plans today for a fun-filled vacation at Margaritaville Resort Cape Cod. For more information and to book your trip, visit MargaritavilleResortsCapeCod.com.
Hi, it's Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Trusts in Your Financial Plan. Mike, a lot of times when we talk about financial planning, it's with the idea of having your money available to you to use when you need to use it. How do trusts work to kind of keep that idea going, not just for yourself, but also for the next generation as well?
Sure, and it doesn't always need to be the next generation, because how many times have you heard somebody say, hey, look, I raised my kids, they're in a good spot, I want the less check I write to bounce. I'm spending this money. But, there can be situations where trust can benefit even a married couple in the event of a lawsuit or a nursing home that's unexpected, especially if there's a big age gap. That can be critical. But for next generation planning, it gets much more common, and especially in the New England area where most states have an estate tax, there's a lot that can be done from a multi-generational planning perspective to, if not eliminate those taxes, at least mitigate them to a large degree. I mean, you think about here in New England, the value of your primary residence, which you sell, it might not be subject to capital gains tax, but if you die, is most certainly subject to estate taxes. There's a lot that can be done in the way of trust planning.
Our guide this month is titled Trusts in Your Financial Plan, and you can request it by calling 800-393-4001. Again, that number is 800-393-4001, and the guide this month is titled Trusts in Your Financial Plan and details a number of ideas about how you can fit trusts into your financial plan.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mark Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mark Fandetti.
Kicking off hour 2 of the Financial Exchange, the last hour of the Financial Exchange for this week, actually. So enjoy it while you can, because then we take the whole weekend off, and we'll see you on Monday. Kentucky Derby weekend, by the way. Either you got any ponies you're looking at?
This has been the least amount I've paid attention to the Derby in some time. It kind of caught me by surprise. It was this weekend, honestly. I couldn't tell you a single horse.
Not
this
a
weekend.
single horse?
Not one horse, Chuck.
Tucker, if you owned a horse, what would you call it?
Fandetti.
Nice.
Because it only runs when it wants to. Track looks muddy. I'm good.
Just call it failure.
Oh, wait a second.
So the favorite looks to be we got 3-1 odds on Journalism.
Failure.
And then Sovereignty is at 5-1 and Sandman is at 6-1. So those appear to be the three favorites. Again, I know this is the one weekend a year that I follow horse racing. Actually, 1 out of 3. And usually, quite honestly, I can't remember the last time. What's the sequence for the Triple Crown? It's
Belmont.
Is the Belmont next or is the Belmont last?
Belmont's last.
Preakness is next.
So this is the first, Kentucky.
This is the first.
Okay,
I couldn't remember if it was Preakness or Belmont second.
Okay.
Usually, no one watches the Belmont usually because there's no Triple Crown, contender at that point usually. But yeah, I know absolutely nothing about horse racing. But what I do know is that markets today. See how we did that? Markets today are broadly positive. And we've got the Dow Jones Industrial Average up 450 points, about 1.1%. S&P 500 is up 71 points, about 1.25%. And the NASDAQ up 246 points, about 1.4%. So overall, we've got all three major U.S. indices broadly up. The interesting thing is this is happening despite Amazon being down 0.25% after earnings and Apple being down 4%. So even with those two big companies creating some drag, you just got a ton of other stocks that are moving up pretty meaningfully today, and so that is dragging indices significantly higher. This would be the 9th day in a row, by the way, that the S&P 500 closes up if it were to continue on this path. Obviously, anything can happen in the last 5 hours of the day and week, but look, you've got 9 days in a row. I will tell you, stocks don't usually continue going up every day forever, but hey, it's been a huge relief rally that we've seen since last Monday, where it looked like stocks might be heading back to retest some of the lows that we saw earlier in April. Bonds also selling off meaningfully today. And so you try to make sense out of, what this means and what it's telling us, because none of us know for sure, but the 10-year Treasury is up 7.5 basis points back above 4.3% after a brief trip down in the last week or so. And so you got a few different ways that you can interpret this, Mark. I'm curious. None of us know, but I'm curious which one of these you think has the most credence. Number one, we had some signs that maybe we're getting to the point where we're talking about having China-U.S. trade talks. If so, does that mean, world growth recovers and U.S. growth recovers, so you might be seeing bonds selling off because of that? That's one possibility. Possibility number two, the Trump administration unveiled their kind of broad outlines of their budget plan today that had significant increases in defense spending and things along those lines that is likely to, result in the deficit not becoming smaller over time. Is this, the bond market pushing back against the idea of higher deficits? Maybe that's something that's going on. Is there anything else out there that could be doing this? I don't know. These are kind of the two biggest stories today, but maybe some combination of those things. I'm curious to get your thoughts on it.
I think it's a combination. As always, it's hard to decompose any one variable like interest rates and how much they moved and attribute that movement with pinpoint accuracy to various causes. So I think it's probably some combination. And what makes it a little confusing is that the rates we see quoted in the newspaper, on TV, wherever, these are nominal rates. And underlying that nominal rate, there's a real rate, which is driven by real forces, the deficit, increased borrowing that you alluded to, or perhaps better economic growth prospects are driving real rates higher. Or perhaps the rise in nominal rates is due to the expected inflation part of nominal rates. As I said, under the hood, there's a few things going on with the nominal rate we see quoted every day. And it's only in retrospect, and even then not with great accuracy, unfortunately, that we can say what drove interest rates higher over an extended, say, period of time.
Piece in the Washington Post talking about basically some of the... It's titled "Economic Hazards Are Piling Up. Are they one-offs or something worse?" And look, I think this is kind of the question that no one has all of the answers to right now. But you do have some things that are, popping up as concerning signs. What are some of the things that are discussed in this piece, Mark?
I think it's most of what you and Mike Armstrong and Paul Lane have been talking about here on the show for the past several weeks. Whether you look at the commentary coming out of corporate leaders, and it's measured, to say the least. They're expressing, as Amazon did yesterday, a lot of uncertainty in the economic picture. Or so there's the increasingly gloomy corporate picture, at least in terms of short-term expectations. There's survey data, which, as you have covered amply on this show, has deteriorated at an epic, historic pace in the past several weeks. But maybe that'll turn around as tariff deals are struck. We don't know. And then there's the so-called hard data, like we got earlier this week in terms of GDP, which was negative, maybe due to one-offs, maybe not, in the first quarter. So whether you look at the hard data, the soft data in terms of surveys, what corporate leaders are saying, they're painting an increasingly bleak, at least short-term outlook.
It does seem like the next 2 to 3 months are going to be critical for determining where the U.S. economy goes. Is that a fair statement, Mark?
Yeah, and I think you could say that at any time, not just in periods of seemingly acute uncertainty as we're experiencing today.
No, but I think like there's, I mean, obviously, look, yes, you can always say that the next couple months of data are important, but generally, there's nothing that you would expect to really change the data very much in the next couple months.
Yeah, I hate to be a stickler, but there never is. It's not like the big shocks. Look, the best forecast of GDP or inflation or even unemployment is what it was last time, or what its change was last time. That's what a random walk is. My best guess is what it did yesterday. That's also true of stocks and interest rates. I think I'm repeating myself now, but anyway. So you can kind of always say that. Those models do really well, the so-called naive forecasting approach. Tell me what it did yesterday, I'll tell you what it's going to do today, and tell me what it did today, and I'll tell you what it's going to do tomorrow. Very high accuracy associated with those models. Where they really go off the rails is an abrupt, sort of unexpected turning point, as you'd expect. The past becomes a very bad predictor when the underlying regime has changed.
And I guess that's what I'm getting at, is that you have a clear policy shift that has happened here. And so it's I think what I'm more getting at is, hey, we're going to have to see how businesses and households actually respond to that policy shift in the next few months. And that's something that can get you away from that okay, whatever it was doing before is probably what it's going to be doing next. I think that's the key thing that we need to see, which is, hey, how does this actually impact the decisions of millions of people and millions of businesses and how they go about making their financial decisions? Yeah, and what are the concrete impacts going to be? And we can theorize all we want, but again, we don't know. But we're going to have to see what those decisions look like in the aggregate. I think everyone who's all like completely doom and gloom is like, expecting something like March of 2020, and it's not that, just because you're not actually shutting that much stuff down. But yes, you're going to have businesses that do close because of they're not able to import the stuff they need at the price they need from China. You're going to have trucking companies. We've already seen a couple that are closing down because of this. So it's something where you're going to have these, kind of sporadic pockets of things that you're seeing. I think the question is, does it develop into something that's big enough to change that trajectory of the U.S. economy?
If March of 2020 happened again, it wouldn't unfold the same way, because we've had that experience already. That gets incorporated into our expectations.
Sure.
So our response changes. An economist by the name of Robert Lucas, who just passed away last year, who won the Nobel Prize, made this point. It's called the Lucas critique. You cannot rely on past relationships when doing your forecasts, because those relationships are influenced by expectations, which are themselves formed by past experience. I'm not saying this as elegantly as he did, but you get the point. So history is interesting. It's the only guide we've got, but it's not a very good one because of the very fact that we can refer back to it. It affects our expectations of how the future will unfold.
Let's take a quick break here. When we come back, we'll do our trivia question for the day, and then we'll talk about where we're starting to see companies hiking prices because of tariffs right after this.
The global trade war is in full swing. How long will it last is anyone's guess. Keep it here for the most up-to-date information plus breaking news every day, right here on the Financial Exchange Radio Network.
A solid financial plan has many layers, and trusts are often a core piece. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Understanding the various kinds of trusts that exist can be extremely beneficial to your strategy. If you're retired or nearing retirement age, a trust may help you with a wide range of issues, such as asset protection, tax efficiency, and avoiding probate. Call us today at 800-393-4001 and ask for our new guide called Trusts and Your Financial Plan. We'll discuss a number of different trusts and the areas in which they may help and how to determine which one may be right for you. Even if you already have a trust in place, this guide can provide a description of certain issues that may arise and could help you decide if changes are needed. Call us today at 800-393-4001 and get your guide today, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, two of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com. Creating the right estate plan to help secure your future takes effort. Cushing & Dolan are experts in estate planning. Their new guide is called Detour Ahead, Estate Planning Blunders to Avoid. In it, you'll learn how to make the right decisions to always protect your assets while avoiding costly mistakes, any one of which could have a dramatic and damaging effect on your financial strategy. As an example, if you've created a trust more than 10 years ago and haven't updated it since, you're setting yourself up for problems. Don't take chances with the assets you've worked so hard to attain. Cushing & Dolan's new guide will help you address issues like this, so call right now, 866-848-5699, and ask for your copy of our new free guide called Detour Ahead, Estate Planning Blunders to Avoid. That's 866-848-5699, or request it online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John and are consistently voted one of the top Caribbean vacation destinations. Enjoy world-class cuisine, pristine beaches, rich history, and a vibrant nightlife. Book your trip now to visit America's Caribbean paradise, the United States Virgin Islands. For reservations and more information, go to visitusvi.com. That's visit usvi.com. Time for trivia here on the Financial Exchange, and today is David Beckham's 50th birthday. The global soccer star made his name as a member of the multi-champion Manchester United squad. Beckham's fame rose to another level when he married Victoria Adams, a member of a hugely popular female musical group in the 1990s. Trivia question today: what female group was Victoria Adams a member of in the 90s? Once again, what female group was Victoria Adams a member of in the 90s? Be the seventh person today to text us at 617-362-1385 with the correct answer, and you win a brand new Financial Exchange Show t-shirt. Once again, the seventh correct response to text us to the number 617-362-1385 will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Mark, we got a piece in the New York Times. The headline is "Companies are serving notice. We're raising prices because of tariffs." And look, this is not surprising. When companies have an increased cost that they have to pay, they often try to pass that cost on to their end buyer in order to maintain their margins and their profits. I think it's an open question right now if this is going to be successful, simply because I think there are some different dynamics compared to 2022 and 21 when we saw inflation, spike up to north of 9%. I'm not sure that the end buyer is necessarily going to want to or be able to absorb these price hikes the same way that they could then. Your thoughts?
Yeah, I guess it depends on how sensitive the demand for the various goods affected is or are. I don't look. It should be broad tariffs should be inflationary, at least temporarily. When prices, and the Treasury Secretary made an erroneous argument that was debunked long ago, but it's since we got on the topic, I'll just very briefly say the Treasury Secretary said, "But yeah, you got less money to spend on other things, so shouldn't prices go down?" People made this argument in the 70s, too. Well, oil prices are going up, but that means you got less money, so shouldn't the price of other things go down? In the long run, the answer is, of course, yes, but in the short run, other prices are sticky or rigid, as economists like to say, and that pushes the average price up in the short term. Question is, what does the Fed do? If the Fed keeps the money supply growth rate constant, the contracts because there's less money in there's less money overall to spend on stuff. You're spending more on the tariffed good, same amount on everything else. The money supply's growing at the same rate. You get recession. The Fed has to accommodate that. That's what leads to the cycle of wage price increases that we saw in the 70s. I got a little bit off track there, but I just want to make the point that it is a truism, virtually. Some economists would disagree, but they're a very, very small minority, that just because some prices are going up doesn't mean you spend less on everything else, and therefore those goods prices go down. That's not how things have worked in an empirical, so to speak, sense. That's why tariffs are likely to be inflationary. Unless the Fed allows a recession to happen or doesn't ease as a result, that could produce a different outcome.
Let's talk about the combination of potentially recessionary forces versus that potential buildup for inflation. Is there a case to be made that if those forces are strong enough, then you actually end up with, it kind of ends up, it's just like, where's the pain going to be felt? Is it going to be felt by everyone through inflation or through companies having to kill their margins because their demand is getting eaten up? Is that correct?
I would frame it in terms of a trade-off between unemployment and inflation, which
sure.
is the traditional way to think. But we're saying the same thing. So I think it is. The Fed's got to decide, and always historically, even the legendary Paul Volcker, came down on the side of protecting as many jobs as possible. He flinched like a few times, Paul Volcker did. People choose not to remember that, but in 82, we were lowering rates aggressively in response to contracting economic growth, despite lingering high inflation. There were other forces bringing inflation down at that point. But the Fed has always cut rates in response to economic weakness, regardless of the inflation picture.
And I think that you can say that those facts are in evidence with this Fed as well in terms of their responsiveness to concerns about unemployment relative to how they've responded to inflation. you go back, I always like to go back to this one just because it's fun, but you go back to January of 2022, and you're sitting there and you're like, hey, inflation is, sitting at, I think at the time it was in the high 7s or something like that, and just about ready to ratchet up to 9 in the first half of that year. And you're sitting there and after Russia invades Ukraine, you go, okay, like this has to be inflationary. And the Fed goes, we're going to hike 0.25%. We don't want to do more because we're not sure, what the overall impact is going to be. And you're sitting there and you're like, oh my goodness, inflation's, in the high single digits, and you're hiking 0.25% because you're worried about, an invasion of a resource-rich country. Like, what are we doing here? So clearly they were slow there. And then you go back to last fall, where I always love going back to this one as well. We get I think it was the August jobs report, and Jeremy Siegel from UPenn is on. Look, I like to give Jeremy Siegel a little bit of little nudge here and there, just because he's really smart guy, way smarter than I ever will be. But he was still on every news network, yelling about, hey, we need 150 basis points in emergency rate cuts right now because of a couple bad, not even bad jobs reports, just weaker than we wanted to see. And the Fed responds with a 50 basis point cut, and then 225 basis point cuts later in the year before pausing. And so I think there are definitely facts and evidence that the Powell Fed has a very much a dovish tilt to it, where at the first sign of actual weakness, they're going to move very quickly to protect the employment side the best they can.
Yeah, I think that's both because of maybe personal bias. We'd all want to preserve as many jobs as possible. We're human. It's also what their models are telling them. Their models at the time were saying these price increases will be temporary. We don't have to be overly restrictive in response.
Quick break here. We got the trivia answer when we return.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com.
A solid financial plan has many layers, and trusts are often a core piece. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Understanding the various kinds of trusts that exist can be extremely beneficial to your strategy. If you're retired or nearing retirement age, a trust may help you with a wide range of issues, such as asset protection, tax efficiency, and avoiding probate. Call us today at 800-393-4001 and ask for our new guide called Trusts and Your Financial Plan. We'll discuss a number of different trusts and the areas in which they may help and how to determine which which one may be right for you. Even if you already have a trust in place, this guide can provide a description of certain issues that may arise and could help you decide if changes are needed. Call us today at 800-393-4001 and get your guide today, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today we're talking about the top estate planning mistakes to avoid. Todd, what is the downside of adding your kids to your accounts or adding their names to your real estate deeds as a joint owner? Won't this avoid probate?
You're absolutely right. It would avoid probate, but there are better ways to avoid probate than just doing something simple, right? Simple isn't always better. Throwing a name on an account or adding a designated beneficiary or a joint owner on a piece of property might not be the best way to go. Here's the problem. If you name one of your children as a joint owner and you have 3 children and you put that child on just because it's convenient and they're geographically close to you, well, you could be accidentally disinheriting your other children because this property, this asset will only go to that child. That child doesn't have to give it to the other kids. So that's a problem. And if you put your name, if you add a child's name to your real estate, now you're exposing it to that child's creditors, that child's potential divorces. That's never good. And plus, you've lost control over it. If you try to sell it, you need that kid's permission, and half the money would go to that kid. Please, folks, set up a trust, fund your trust much better than just trying to do it shorthanded and just give away assets or adding names to accounts.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details the estate planning blunders to avoid. You can request this brand new guide by calling 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
Trivia question today was, what female musical group was Victoria Adams a member of back in the 1990s? That would be the Spice Girls. Bobby from Manchester by the Sea is our winner today, taking home a brand new Financial Exchange Show t-shirt. Congrats to Bobby. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Mark, we got a piece in Bloomberg that really confused me today. It's titled, Warren Buffett's favorite valuation indicator flashes a buy signal. And what it notes, and it has the chart here, which is why I'm particularly confused. I'll read here. The Buffett indicator measures the ratio of the total value of the U.S. stock market via the Wilshire 5000 index. Okay, so value of the stock market, divided by the dollar value of U.S. GDP. And this is one that he's talked about quite a lot. It stands at its lowest level since early September, even after a bounce that has sent stocks screaming higher in recent weeks. So then I look at the chart because I was like, okay, so this has to be at kind of a low value on the chart. The the ratio right now is closing in on almost 2-to-1, which the highest that we've ever been was we had 2 periods, one in 2021, early 2, and one late last year, where the ratio of how much the stock market is worth relative to GDP hit this level. So we're basically just shy of it. And this piece, and someone in this piece that they are interviewing about this, someone by the name of Adam Sarhan of 50 Park Investments, is saying, I'll read his quote, "This is a crucial indicator because it helps traders know when to deploy capital and buy stocks. There are still reasons to be concerned, but if Trump isn't playing hardball with tariffs, people are going to buy with valuations much more reasonably priced now." Valuations much more reasonably priced now. The 30-year average of this valuation metric is a ratio of 1.2 to 1. And we're 50% above that here, and he's saying that stocks are much more reasonably priced now. Now, look, you can make a case, in the last couple of weeks, okay, people got really nervous, and then the market bounced back, and so obviously you've seen a recovery. But I don't see anyone who's been screaming for the last 2 weeks about the reason they're buying being valuations are now cheap.
Yeah, this is a very bad article. It's poorly written. The charts are poorly interpreted. You should be skeptical. We were advised by a prominent government official lately to, quote, do our own research, quote, with respect to a complicated topic, which we don't need to veer into. But, doing your own research on matters that are decided by evidence is hard without professional training. And I say this as someone who spends a lot of time trying to improve their own skills. It takes a lot of work, and you're often wrong. When somebody slaps two things together, makes a ratio out of them, then charts it, you got to be very careful in drawing conclusions. They
didn't even interpret the chart right.
Yeah, they didn't. Now, of course, valuations are still sky. You've made this point. I don't know why I'm even saying it. Valuations are still through the roof. By that, I mean the price of stocks relative to, in this case, they use GDP, gross domestic product. Not clear to me why you'd want to form a ratio of those two things, but we can talk about that on a different day. The point is, even if you believe that ratio held meaning, and I don't, but even if you did, it's still at the second or third highest point in history rather than the highest point in history. That doesn't sound like a time to back up the truck to me, is something you've already said.
Creating the right estate plan to help secure your future takes effort. Cushing & Dolan are experts in estate planning. Their new guide is called Detour Ahead: Estate Planning Blunders to Avoid. In it, you'll learn how to make the right decisions to always protect your assets while avoiding costly mistakes, any one of which could have a dramatic and damaging effect on your financial strategy. As an example, if you created a trust more than 10 years ago and haven't updated it since, you're setting yourself up for some problems. Don't take chances with the assets you've worked so hard to attain. Cushing & Dolan's new guide will help you address issues like this. So call right now, 866-848-5699. That's 866-848-5699. Or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
I do actually want to dig in on that last topic that you mentioned, just because I think it's an interesting one to explore and explain to people in terms of, hey, should you be comparing the value of U.S. stocks to GDP?
No.
Yes, I agree. I agree. But the reason... let me tell you my reason why, and then you can tell me yours. Yours might just be as simple as the two have no business being compared just because they shouldn't be. You're comparing a level to a rate, which is the problem here. And what I mean by that is the value of the market is how much are stocks worth. It's a level. It's saying this is, how much these are worth today. GDP is not a level. It's a measure of how much output the U.S. produces in a year. It's no different from miles per hour. This would be like comparing miles per hour to miles per gallon. It doesn't do you any good to do that. It's completely different things. I know those are like two rates, but one's actually a level in terms of like miles per gallon is, a fixed level, and miles per hour is how fast you're traveling. So I think that ultimately, if you're looking at this, it may have, some kind of weak correlation that you can, use in certain circumstances. Maybe you personally find it useful or something. Okay, fine, whatever. But ultimately, it's not really a useful comparison because there are plenty of times that you can point to this ratio as having been expensive relative to history and said, I should sell stocks now. And that was the exact wrong thing to do. Likewise, there are other times where you could be like, hey, these look really cheap based on, history. and it was the wrong time to buy them. So
yeah,
it's just not a reliable metric that I think you can use in any way, shape, or form, because simply saying, well, it's gone down, so I should buy it, gets me back to my favorite quote about stocks. How does a stock lose 75% of its value? Well, it loses 50 and then loses another 50. Anything else to add, Mark?
No, other than when you see two series of anything, any variable, and it could be in any domain, any aspect of life, when they're both trending up, don't assume that one's moving the other. Assume they're both responding to a third factor that you're just not thinking about. So things will appear to be correlated. Is true, they are correlated, but there's no there's no causal, as researchers like to say, effect. We've all heard that expression. Correlation is not causation, and keeping that in mind will prevent you from reading something incorrect into graphs like this. But you're absolutely right about stock and flow concepts. GDP's a stock, as an accountant might say, and a GDP's a flow. Excuse me, I've already gotten myself confused. GDP's a flow variable, and stocks are, well, in this case, no pun intended, they're a stock variable.
There you go. Let's take a quick break. When we return, we're going to continue talking Warren Buffett, as we're going to be joined by LaMonica from Barron's. We are talking Berkshire Hathaway right after this.
Tariff fever is in high gear. We've got the latest on what might be next and how long it might last. Only here on the Financial Exchange Radio Network. Margaritaville Resort Cape Cod is perfect for your next New England vacation. Located just off Route 6 in Hyannis, the resort has everything you need to enjoy an incredible week with your family or a quick weekend getaway. Along with first-class accommodations and food, Fins Up Water Park is packed with aquatic adventures that will keep the kids entertained for hours. The summer season is coming soon, so make plans today for a fun-filled vacation at Margaritaville Resort Cape Cod. For more information and to book your trip, visit MargaritavilleResortsCapeCod.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
Creating an estate plan can be a difficult process if you aren't working with an expert who can make sure your plan is secure. Cushing & Dolan can help. Call them today at 866-848-5699. Estate planning is their business, and their new monthly guide is called Detour Ahead, Estate Planning Blunders to Avoid. Don't put your assets at risk and open yourself up to severe tax consequences. Even if you already have a plan, this guide may correct an issue that could come back to haunt you in the years to come. Proper estate planning is crucial to you being able to enjoy your later years, and it may be the difference between retiring comfortably or living under incredible financial pressure. Call Cushing & Dolan right now at 866-848-5699 and get your free guide today. That's 866-848-5699, or request it online from their website, LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Estate and financial planning go hand in hand, and one of the most common ways to keep that bond secure is with a trust. Our new guide, called Trusts in Your Financial Plan, is available right now. In it, we'll discuss the various types of trusts that exist and how they might benefit your planning process. Trusts provide a number of different protections for your assets, including privacy, control, and tax efficiency. If you're retired or nearing retirement and have concerns about your financial strategy and whether or not a trust may help, call us today at 800-393-4001 and ask for your free guide called Trusts in Your Financial Plan. Learn about how a trust could make a difference for you and your family by calling 800-393-4001. That number again is 800-393-4001, or you can request the guide from ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
Ladies and gentlemen, the weekend.
The Financial Exchange has brought up our partnership with the Disabled American Veterans Department of Massachusetts. This year's 5K is Saturday, November 8th, and registration is now open. The race has sold out each of the past 4 years, and slots will fill up quickly. So don't delay. Visit dav5k.boston today and reserve your spot, or join our team here at the Financial Exchange by registering under Team TFE. That's Saturday, November 8th for this year's DAV 5K. Sign up now at dav5k.boston.
As promised, we are now joined by the one and only Paul LaMonica from Barron's, here to talk a little bit about a few Warren Buffett adjacent topics, since Berkshire Hathaway does have their annual meeting this weekend. Paul, you're not heading out there this year, correct?
I am not going to Omaha. I've been there a couple of times. It's always a lot of fun. I had the pleasure one year of actually having a sit-down interview with the late Charlie Munger. That was a trip, to put it mildly. He was a colorful individual. So, I missed that I won't be out there this year.
So let's talk a little bit about Berkshire Hathaway, because as much as this year has been a roller coaster ride for the stock market as a whole, Berkshire has been holding up pretty fantastically, actually. It's up almost 17% this year. What's the deal? What is Mr. Buffett doing right this year, or is it something that's just, not related to anything he's doing?
Well, I think he hasn't done anything, I would say, specifically this year to justify the outperformance. I think it really is just an accumulation of the fact that Berkshire Hathaway is a company that owns several operating businesses that are very solid financially, Geico first and foremost probably, but also it is known for being an investor in value-oriented companies. And while Apple has been a bit of a problem this year along with the rest of tech, companies like Coca-Cola have done extremely well, and that's a top stock, long-time holding for Berkshire Hathaway. You can probably expect that the Oracle Omaha will be swilling several cans of Coke on stage tomorrow to show his support. So I think that's really what this is a reflection of. In times of market volatility, investors recognize that the consummate buy and hold investor that's scooping up undervalued stocks, that's where you want to be in a market like this.
Paul, what's the last company that Berkshire bought?
That's a good question. Bought outright as an acquisition or bought as an investment?
As an acquisition. I know they make changes to the investment portfolio here and there, but I'm struggling to think of the last time they went and outright bought anything.
Well, yeah, that is the thing. I mean, the company has this war chest of cash that a lot of people are waiting for Buffett to do some sort of whale of a deal. They've got over $300 billion. They don't buy back stock, really. They don't pay a dividend. So everyone's waiting for an acquisition. I want to say that the last major acquisition was Precision Cast Parts, an industrial parts company, and that hasn't exactly panned out all that well. So I'm not sure if Berkshire is a little reticent to do deals because of Precision Cast Parts not being a great long-term value for the stock, even though, of course, over the years, Berkshire's done a lot of great deals, but again, $300 billion, more than that in cash. The stock market has pulled back this year. You'd have to think that Berkshire's looking, and that Buffett, who's not getting any younger, wants to do that big whale of a deal before he retires or, moves on to the great in Wall Street in the sky, if you will, not to be morbid.
What about the companies that Berkshire owns in their investment portfolio? What changes have we seen there in the last year or so, and how do you think what do you think it tells us about how Buffett or his disciples may be looking at this market at this point?
Yeah, it's a great question. As you just say, and you say disciples, we all know that Todd Combs and Ted Weschler, two of his investing lieutenants, they are definitely another, people are going to be focusing on what they're doing even more closely. There are questions about Apple, I think, and whether or not, that is, a holding that, Berkshire, are they souring on or not? They haven't, necessarily bought as much. But, Berkshire in the past couple of years has made some interesting new holdings, looking up what the most recent ones are here. They have, bought, Constellation Brands and Domino's Pizza. Those are two stakes that are relatively new that I think shows that Berkshire continues to favor the American consumer. Those are both brands that obviously resonate with, American consumers. Pool Corp is another, interesting one. They've increased their position in, that, distributes swimming pool supplies. So interesting is if you're going to bet on the housing market, maybe, rebounding, if interest rates continue to fall, Pool Corp could potentially benefit there. So those are three in particular that look like, compelling new-ish holdings to go along with the, Apples and Bank of Americas and Cokes and other, longer time holdings for Berkshire Hathaway.
Very good. Paul, appreciate you joining us today. Have a great weekend. Enjoy the ponies tomorrow. I know the Derby is always a favorite for everyone in the spring, but we'll catch up with you soon.
And hey, journalism is the favorite. That's not a phrase you're going to hear all that much in this day and age, but go journalism.
I saw that. It's what a fantastic name for a horse right now. Paul, have a great weekend, and we'll see you soon.
Thanks a lot. Have a good one, guys.
That is Paul LaMonica from Barron's. Mark, what did we not get to that you want to make sure we cover today?
Japan's finance minister, Chuck, brandishing the threat of using their massive treasury hoard. And treasury debt is just the debt of the U.S. government. There's over $36 trillion in debt outstanding. Fed owns several trillion of that. The other $29 trillion that the Fed doesn't own is owned by us and foreigners. Foreigners own about a third of that. Japan owns, I'm going to call it a 1/30th of that, a little over $1.125 trillion. Looking at what rates are doing today, now I don't think what Japan's finance minister said today, suggesting that Japan could sell its treasuries if this trade war drags on. But foreigners overall own about $10 trillion of the overall debt held by the public. If this thing dragged on and they did choose to use that as a weapon in trade war, or if they just lose confidence long term in the ability of the U.S. government to meet its obligations, it's just another force pushing up interest rates in the longer term.
I think the piece that I find interesting just with this is, obviously kind of what you get at there, but look, if you're talking about countries where you would think there would be a quicker path to a resolution with some of these trade questions out there, Japan would be pretty close to the top of the list in my mind. And it doesn't seem like they're that close to a deal. Now, of course, like next Wednesday or something, they'll come out and be like, hey, like we've figured something out with Japan and blah, blah, blah. Everything's, going back to normal. But there was this, and I also saw reports that Japan was really pushing back on the auto tariffs for, obvious reasons with Japanese automakers being impacted. But I found, again, this should be one of the countries that you kind of view as low-hanging fruit to being able to get a deal done. And the fact that you're hearing this from the Japanese side is kind of interesting me in that respect.
Not a great sign.
We are done for the day and the week. Hope you all have a great weekend, and we'll be back on Monday. Busy week next week with the Fed meeting on Wednesday, so a lot to touch on there. Stocks remain positive. We will see you on Monday.